outside so you can stay inside and get those taxes ready, because tax season is almost here. And with that paperwork, you already have to file. The last thing you need is to be audited. It's a word a lot of people cringe when they hear. Joe Bert with Certified Financial joins us now with what you can do to avoid the auditors. Good morning, and thanks so much for joining us.
Good morning, Lauren. Good to be here.
I think the first rule of thumb is be honest, right?
Yeah, if you're honest, you have nothing to worry about.
Correct.
You know, the thing is if you're going to get audited, you have to be prepared. You know, while you're doing your taxes, keep this stuff together. Don't just dump it in a box and then cross your fingers and hope you don't get audited. So when you're going through your taxes, you get all your stuff together, file it correctly, because heaven forbid if you are audited, you're ready for it.
Okay, so what are some of the top things that you can tell us that you know that the auditors are looking out for?
Well, first of all, if your chance of being audited are about 1%.
Okay.
So if you're about 1%, yeah, the odds are pretty good.
Yeah.
However, if your income is pretty high, they say if your adjusted gross income is over $1.5 million, your chance of getting audited go up about 10 times.
Okay, so I don't have to worry about that.
Well, when you get to New York, yeah, they're going to be kind of looking for you.
Wow, 10 times.
Yeah.
Okay. So secondly, deductions, and a lot of people, of course, have these.
Well, this is where I think the red flags go up. If you take these questionable deductions,
right.
You know, people write off your charitable contributions. You want to have receipts for that.
Yes.
But you want to watch if you give gifts in what we call gifts in kind. This is artwork, if you give away a car, those kinds of things, and you write off huge amounts, that's going to be a red flag. So you want to be careful that you do that. You know, President Clinton gave away a $6 underwear, and of course she got away with it, but I'm not sure about you and me.
Right, not everyone can. Right. Okay, up next, multiple sources of income. So this is people that have...
if you have more than one job. And what you want to be careful of, you know, your employer is going to send a W-2 or a 1099 if you're self-employed to the IRS. The IRS gets that form. Don't be stupid and bury that and say, you know, it's only 50 bucks, 100 bucks, 200. That's what runs up the red flag, because it's the cockroach theory. They see one mistake like that. If there's one cockroach, it means there's a lot, and there may be a lot of cockroaches.
Right.
So you want to be careful. Report all that income that goes to the IRS, including the interest notices that you get on 1099s from the bank,
okay,
and dividends and capital gains you get on your mutual funds.
Okay. And finally, home office deductions. Everybody's working from home.
Well, this is a big one, because this one will raise a red flag, because this is the easy one to take. You know, you're right off the family room where you happen to have a desk and your computer, but it's also where the crib is and the Xbox is and your big screen TV and the fireplace. You know,
gotcha.
It's not really your home office. It has to be used exclusively for that purpose.
Okay.
So don't run up the red flag.
Okay. Let me ask you a question that some people at home might want to know. If you're using the online software, one of the things they guarantee if you pay to upgrade is that if you get audited, we'll have your back, or whatever they say. Is that legit? And can you trust that?
It is legit, yeah.
Okay.
And it isn't really that complicated. Filing your taxes today isn't as complicated as it used to be. If you have rental property, if you have a lot of investments, or have your own business, you want to seek a tax professional.
Okay.
But generally, most people can file their taxes. The TurboTax or do it online.
Okay, perfect. Joe Bert, thank you so much. All right.